Hello, everyone. This is On Wall Street with the TradersPerspective.com doing my midweek analysis. It's Wednesday evening. Before you, you have natural gas. I'm looking at the weekly time frame. Just wanted to kind of circle back from my last couple of videos where I had noticed this potential head and shoulders pattern forming here. And again, to recap on previous videos that I've done, this is the major weekly uptrend line that we did fail to hold and now act as resistance. Again, this area here around 3.3 has been a solid resistance point, and now we are kind of trading to the downside. So again, keeping in terms with the perspective of the time frame, this is the weekly time frame. We have resisted this 200 period simple moving average now for several times over, and we are between this 50 period simple moving average here, a little bit lower. Last time we got underneath of it, we popped back above. This week, however, it looks like we may be finishing this week below this 50 period simple moving average, thus further confirming this price action to the downside here. I did go ahead and draw this trend line here to show that we do have some level of support to watch out for. Not necessarily stating that this would hold in all cases, but as far as the intraday flips and trades that we all love is concerned, I have identified it here for you. So on the daily time frame, you can see we've popped up, trended higher, and then we've been breaking down for a little bit now. We went underneath the 50 period simple moving average, shown here with the black line, and failed to hold the 200, which is shown here by the pink line. So dropping down to the 4-hour time frame, you can get a better look at what this red line here means. That's basically the sell pressure line where selling has been coming in, and we basically have been looking to hold this level. So we have broken above after hitting around 2.934. We have broken above this downtrend line here indicated by this red line and failed to get above or close strong near this 50 period simple moving average. So we hit the the 50 period simple moving average, and we've come back down. Now my moving averages here indicate a buy signal. So me personally, I'll be looking to see if natural gas can actually hold above this, the price action above this trend line here. If we can kind of swoop down, test around 2.977375 or so, 2.98 even better because we had a couple lows here. So 2.988 would probably be the best, honestly. And if we can swoop higher and then break above this 50, which will probably be around 3.05 by the time it ends up swinging lower here towards the end of the week, we need to hold this trend line, obviously. So that's step one. Number two is we want to kind of build a support near 2.98 or so, and then kind of roll price. Basically what I'm saying is we don't want to go too much lower than here. So if we go too much lower and fail to hold this trend line here, then there's a real possibility we can go further to the downside, and I'll show that in a moment as well. But what I'm saying, if you're looking to get bullish here, you want to see 2.98 kind of hold here, which is going to coincide with this trend line, and then you want to see price shoot back up and then break back above this 50 period simple moving average. So this is probably not going to happen in favor of the bulls from what I'm seeing here. We may actually pop up a little bit, but again, watch this 50 period simple moving average. Even though we've broken out of this downtrend selling pressure here, you want to make sure that the price can actually get above this 50 period simple moving average. So this is the 4-hour time frame. This is going to happen Thursday. This may happen next week sometime. So in either case, you want to see price hold the lows. Obviously, that's a given for anybody that's trading or investing. You want to see price hold a certain level and then bounce up higher. So what I'm saying heading into the week, end of the week, excuse me, is we've bounced up here, and now I'm looking for the zigzag back down to test this level here. And if we can maintain this, have a higher low, and then kind of build a trend line, which would look something like this, and that would be a good sign heading into the end of the week. If you're trying to get bullish here, but if you're looking at the bearish side of things, and we do have kind of a bearish bias for a little bit at least, we are potentially going to test this level here at around 2.87. Or even lower. And the reason why I say or even lower is because this trend line here is the saving grace for prices maintaining a higher low as far as general cycles are concerned. So if this level holds and we can bounce back up, then probably next week sometime I'll say, okay, well, we held this level. We're going to go up and test this 50 period simple moving average, which will be located around 3.045 or so, estimating, obviously. But that's the level that we'd be looking to break. So as far as we're concerned right now, this week, this weekly candlestick, we need to make sure that price closes either above this in a little bit or above this in a bigger way. So my moving average here is still showing a buy signal on a weekly time frame. On the weekly time frame, I'm not as worried about it at this point in time. The main issue that I have with this chart is going to be this head and shoulders pattern and how price is now below this 50 period simple moving average. We closed below it last week, and this week we cannot get above it. So even though we bounced a little bit today, that's kind of just I'd say some dead cat bounce or whatever you want to call it, intraday flippers, a little bit of short covering, whatever it may be. This is going to be the key. So if we can somewhat hold, and this trend line right here is just me kind of saying what I'd be looking for personally. So can we develop some kind of a trend line here where when this moving average comes back down, can we shoot above it and then aim for higher levels like this 200 period simple moving average on the 4 hour time frame? So I think I've given you kind of a few different perspectives to look at here. Either way, if you're going to be going long, please be sure to use your stop losses here. Bears, you could probably get away with it a little bit, but usually, if you trade natural gas, you know that it's always better to have a stop loss in than not. But the odds definitely favor the Bears right now. So as far as I'm concerned, we're seeing some further selling pressure. If we're going to get going, trying to maintain these lows, you'd be seeing some kind of a trend developing towards an upwards consolidation and then a breakout and then test this 200 period simple moving average if you're bullish. Now, if you're bearish, you'd be thinking that price would break below this and then further head down to, I'm going to go to the daily time frame now just so you can see it a little bit easier. You'd be looking at least testing this level. And looking at the daily time frame, you can see my moving average is completely acting as resistance here. We are below the 200 period simple moving average here. So bears, you have the price action in your favor for sure. The key is if you break below this level here at around 3, looking at the larger time frames, refer to my previous price points for more precise prices. In general, bears, I'd say you have a more favorable and probable outcome of success on this trade. Bulls, if you're going to be trying to put in some kind of a move higher, then you'd want to see this 2.888, 2.9 level kind of hold and then bounce and, like I said, create this trend line here for a break of that 50 period simple moving average. So I'll drop down just so you can see once again what I'm looking at. So again, on the 4 hour time frame, this is the 50 period simple moving average. This is the uptrend line, theoretical uptrend line that you want to see. Let's make it a little bit more realistic for you. You'd be wanting to see like at least this candle, this wick touching, another wick touching, and so on and so forth. But right now, if I was to draw that line, we would have broken that potential uptrend line that we were looking to make. Not to say that it's a done deal. I'm just saying that in general, prices after they bounce like this, they will come back down, shake out a lot of investors that are looking for this uptrend line to hold. So a lot of stops that are placed here, they'll take advantage of it. They'll buy them, let the price drift lower, and then ideally test this level here at around 2.98 or 2.9 or 2.89. So somewhere in that area roughly you're going to see potential support come in if you're a bull. That's this level in general I'll be watching. If it does bounce, then I'll be watching for this 50. If this 50 still proves to be selling, a good selling zone, then I myself will jump in on a position to take a short here and then ride price down and then cover some here, put the stop loss in place in profit, guarantee the profit, and eliminate the risk from my position. But that's just some of the perspectives that I'm looking at as far as long and or short positions. But in general, bears, you obviously, and I've repeated this over and over in this video, but you bears, you have the advantage in this situation. There's tons of inventory, and I imagine that tomorrow we'll see some more. Probably see at least a test of this bottom at around 2.934 and this trend line here. So if we come out with the report tomorrow and we bounce above here, then we will see more short covering. It's a good opportunity to get in for a bounce. I've given you a few different ways that you could possibly play this over the next couple days. So my next video analysis on Sunday should be interesting. I'm very curious how this all plays out. I'm on Wall Street. This has been a presentation by thetradersperspective.com. Thank you all so much for watching. Subscribe to the channel, and thank you so much for watching. Have a great evening, everyone.